Well, this week has had some ups and downs. My Cincinnati Bengals unfortunately lost the Super Bowl to the LA Rams, but there's nothing to cure a big football loss than the release of 13 Fs from all of the super investors for their United States listed positions. In this video, I'm going to cover the portfolio changes for the US held positions for some of my favorite super investors, including Li Lu, Pat Dorsey, Rob Vinall, and Mohnish Pabrai. Keep in mind, these are the changes for the fourth quarter of the 2021 fiscal year. Let me know in the comments below what your favorite moves from your super investors were this quarter. I'd love to hear from you. All right, let's start off with Li Lu's portfolio changes. One important thing to note about Li Lu's changes is that the vast majority of the assets under his management are not reported on websites like Dataroma and Ticker. He has a large portion of his assets that are managed in China. So we basically have no visibility into what those positions are. So here we're only seeing a tiny portion of about $2.6 billion under his management, which is still a huge sum, but just keep in mind that it is not the overall AUM for Li Lu. So there were quite a few changes for his portfolio, especially for a guy who doesn't really make a lot of moves. He didn't touch his Micron position. It's still 40% of all of his US held shares. He added about 20% to his Bank of America shares, possibly as a guard against inflation. Typically, as interest rates go up, banks tend to prosper a little more, and Bank of America is probably one of the best run retail banks in the United States. So that seems similar to last quarter. He added Berkshire Hathaway. He might have that same mindset with both of those positions. The more surprising one is this 50% addition to his shares in Facebook. Now, keep in mind, this is the fourth quarter, so there was no report of Facebook's financials up to this point, where immediately after they reported in January, the shares dove 25%. In the fourth quarter, Zuckerberg and Facebook were buying back billions of dollars worth of shares, and Li Lu was joining them in purchasing shares. For the fourth quarter, we have from the beginning of October through the end of the year. So let's give Li Lu the benefit of the doubt, of course, that he bought at the lowest purchase price share available, which was somewhere around 312 or even 306 in early December. So he has taken a hit on this addition to his portfolio. My guess is that in Q1 we will not see any trims, because if Li Lu had any specific insight into this company, that he thought it was appropriately valued enough to add a pretty huge chunk at around the $300 per share mark, or maybe even higher, I'm sure he's having a field day with the fact that it has dropped over probably 30% at this point. So this drop right here, they report earnings, and now we're at 217. So in this situation, either both Mark Zuckerberg and Li Lu are both terrible judges of the future trajectory of the Meta Facebook business, or maybe both of them understand this business a lot better than most of the analysts and media covering Facebook. All we hear about is the impending demise of Facebook, and there might be something more to it if both of these really intelligent guys are willing to allocate capital there. So just something to keep in mind going forward. And then one final move for Li Lu was he sold out completely of his Pinduoduo stock. Now, this is a company that I had previously taken interest in solely based on the fact that Li Lu had bought in, but now it looks like he has sold out of that position completely. It was a very small position. It was only about 2% of his total US holdings, so not very significant, but that pretty much cuts my interest in ever looking at Pinduoduo. If he's selling 100% of it, and I think he was probably the only super investor that held any major position in that. I'm not interested anymore, to be honest. Yeah, okay, so we have Chase Coleman from Tiger Global Management has a 2% position in their portfolio, but I'm going to just let Li Lu be my analyst on this one and just take a pass on PTD. Okay, moving on to Pat Dorsey with Dorsey Asset Management. And Dorsey this usually makes a lot of tiny moves here and there, but this quarter he made some pretty significant changes here. Starting at the top, we see that he added 75% to his position in WIX. So let's take a look at what the prices looked like for WIX. We go to the beginning of October. We see prices have ranged anywhere from 187 per share all the way to somewhere around 140 per share. So even if you bought at the lowest price per share available at 140 or so, in this past quarter, he's probably wishing that he had waited. He took a big swing on a company that has continued to decline in price. Now, that does not necessarily mean that the business quality has declined. I am sure, however, that he wishes he had saved some of that capital for this upcoming quarter, but I wouldn't be surprised to see him taking advantage of these even lower prices. Now we're sitting at 112 per share. We can take a look at when Dorsey first bought shares in WIX, actually. And that was back in Q3 of 2018 that he first took his position. And he has been adding every so often, almost every quarter since then. So we can hop back over here. So first quarter of 2018, somewhere around here, $60 per share. So he's still sitting at pretty much a double on his WIX position. But if he was willing to add at those prices in the 140s, well, that indicates to me that he definitely thinks that WIX still has a long way to go. I know I've put out one video before on WIX, but certainly with this recent price decline and the continued conviction from investors like Pat Dorsey, and as we'll see later, Rob Vinall, WIX is going right back up to the top of my watch list. There were some small additions in some of his core positions like Smartsheet, Meta, and PayPal. Just basically no action in those positions. So it looks like he's taking a wait and see approach with Facebook. He may not necessarily be too worried about the IDFA changes or the impact of the metaverse investments. Trimmed a little bit in some of the bigger companies in his portfolio, Walt Disney and eBay. Somewhat significant, but to make a 75% increase in your WIX shares, you got to trim something. Nothing too much for the Google, and he's reduced his Upwork. And the SEMrush position is always of interest because he owns now probably, 13% of that company overall. So that's a pretty powerful position, even though it's one of the smaller ones in his portfolio. I would expect to see this one in his portfolio for a long time. And some bigger news is that he did purchase shares in a company called Poshmark, which is, I've done just a tiny bit of digging into this. It's an online retailer where people can sell their used clothes and accessories and things of that nature. So it's an online marketplace. So take a look at Posh. Let's give him the benefit of the doubt. He purchased here at about $17 per share. The performance up until now, he has gone down a little bit. But again, this is not a significant portion of his portfolio just yet, because Dorsey does make very concentrated bets, as we're seeing with the WIX position. So this is, maybe something that's going to play out over the next few years. Dorsey is a long-term oriented investor, of course. So we'll keep an eye on this one. I will probably do a little bit of digging into this, but I'm not sure I totally understand the investment case yet. So mainly WIX, again, has really piqued my interest because the price has gone down so much. When I first really started looking into WIX, the price was the core piece that didn't really make sense to me. So I think WIX is at the top of my watch list here. Okay, let's move on to Rob Vinall of RV Capital. Vinall is an investor that Mohnish Pabrai recently named as an investor to pay attention to and probably clone going forward. I think he's a relatively younger guy, so I think he has a long runway ahead of him. He doesn't manage a ton of money, which is good. He's not basically going to be a closet indexer, similar to Pat Dorsey. So this is one of the main reasons why I follow this guy. He invests in companies with moats and great management teams that have very long runways for growth generally. So again, these are his US listed positions. He has a pretty transparent fact sheet on his website that you can look at after signing up, which indicates that he probably has about 10 to 12 total positions, including a position in Alibaba that he has probably purchased on the Hong Kong Stock Exchange. I believe he also has shares in Prosus as a way to get access to Tencent as an investment as well. So yeah, he's got a lot of the similar thinking to guys like Mohnish Pabrai, where he's looking all over the place to find wonderful companies. And I think Alibaba and Tencent both fall under that umbrella. So definitely go sign up to his website and read his annual letters, look at his fact sheet, so you might be able to get a clear picture about his portfolio and investment style. So again, for his US listed companies, his largest position by a pretty big margin is Credit Acceptance Corp. He did trim that a little bit apparently to add to some of these other positions. Credit Acceptance Corp does seem to be a pretty large position in his portfolio. Based on the activity, the earliest mention of CACC was in Q1 of 2019. So I don't know, his fund has been around for a while, but I don't know how long exactly he's held this company. It's possible, he's held it for several years, even before 2019. Clearly, this company has had a wonderful run, especially in the last decade. But it's unclear where his initial purchase price was for this company. He has trimmed it, and probably rightfully so. It seems like it got pretty expensive here. I don't know much about the fundamentals of the company, but it looked like it was his choice for a candidate to trim so he could add to other positions. Next up is Salesforce. He added about 7.25% to his position there. He first bought this back in the first quarter of 2021. So based on that, it looks like the price is hovering right around where he initially bought into Salesforce. Now, he has a good write-up in his letters on his website about why he purchased Salesforce. And initially, he was actually really excited about Slack, which ended up being purchased by Salesforce. It's a giant company, just over $200 billion market cap. It is still growing steadily. If you take a look at this revenue marks here, it's a free cash flow machine. Look at the growth here is just incredible. And now I think they are actually starting to focus on turning on the faucet for their earnings. So Salesforce, yeah, it might look optically expensive, but based on what I've seen with the network effects, the switching costs, and just the fact that customers love Salesforce, you can build your whole business off the back of Salesforce. So this is definitely another one that's not as high on my watch list, maybe just under that WIX position. Facebook, again, we're seeing an echo of Lilu and Pat Dorsey. He added 4%. So clearly he was not afraid yet. We'll see the reaction in Q1. I doubt there will be much change here to the downside. I think these investors are definitely not thinking about how Facebook is going to end up next quarter, next week. They're looking 10 years down the road. And then speaking of WIX, he added 24% to his existing position in WIX. For all the same reasons likely that Pat Dorsey has. There are high switching costs. There are network effects for having your business run on WIX. And the product seems to be getting better and better by the day. So when you have two super investors that clearly have high conviction in a company, that really perks my attention. And it's probably a mistake to ignore that and not look a little further. Now, these are two smaller positions and they're new buys. However, I do think that Vinall has had Trupanion in his portfolio before. This is a pet insurance company, but it's clearly a tiny, tiny position. Maybe that's interesting. Pet insurance, I wonder what kind of moat they have there. Maybe it's probably a great management team as well. This looks more like a starter position than anything. And for Carvana, in Vinall's most recent letter to his investors, he has a wonderful write-up on the business model and management team in Carvana. We can take a look at the price. So anywhere from 300 all the way down to they had a really rough December. Let's say he bottom ticked it at $204 per share. We're sitting well below those levels right now at about $145 per share. So if you like investing in companies that super investors are down on currently, Carvana might be an interesting one for you. If you want to learn more about this company, definitely go read his write-up to his shareholders. You got to sign up, but it's free. And also there's an investor on Twitter named Cliff Sosin who his number one position is Carvana. So there are clearly some investors that think very highly of this company. And Carvana is basically a door-to-door online used car retailer. So if you want to sell your car, they'll come and pick it up. You take pictures and stuff. They'll give you an offer, and if they agree, they'll come and pick it up. They have it's I don't think it's too robust right now, but they basically refurbish the cars and then resell them. So there's all sorts of synergistic economies of scale once Carvana gets to a certain point for that used car business. So Carvana isn't a company that you're buying right now to reap the benefits of all their major cash flows and earnings. This is a future-looking play for sure. Okay, last but certainly not least is Mohnish Pabrai's updates for his portfolio. Now, Pabrai, of course, has many more positions than just the two listed here, first of all. If we go over to ticker, we can see that he has several international positions in India, these three, Korea, and Turkey and Japan. I'll just note quickly that while I'm here, he is seemingly selling a major stake in his Shinnikin investment, which was something he was very excited about in early 2021. I'm confused as to why he's trimmed 60% of his holdings in Shinnikin, although I never really looked that much into the company. He still owns 1/3 of Rasos. So here we can see that he's added 36% to his Rain Industries holdings, which surprises me a little bit considering Rain seems to be more of a cyclical commodity business that is not necessarily what he might classify a wonderful business like Tencent. So that's a little shocking. Anyway, let's hop back over to Dataroma so we can just take a look at the US listed positions here. He actually added 15% to his Micron holdings. I think his initial purchase price was somewhere in the mid 30s per share. And currently Micron is sitting, as of today, it's almost $92 per share. But let's see, the purchase prices that he thought was acceptable, probably down here, down in the mid 60s. Just look at this chart. Does one think that the quality of Micron's business and the underlying fundamentals of the business has changed enough to warrant price swings from $95 per share all the way down to $66 per share, all the way back up to $96 per share in 1 year? It's very unlikely. Just want to demonstrate how inefficient the market really is. This is irrationality at its core. As far as Seritage, this news did come out a few weeks ago, maybe a month ago at this point, because he's such a large owner of Seritage. So he used to own about 10% of the company. He has sold a little over 25% of that stake. It's still a significant position. Don't get me wrong. Money to fund other investments has to come from somewhere, because it's unlikely that he's raising that much outside capital at this point. He is actively looking in Turkey, and I believe he does have a new investment in Turkey. And he's adding to Micron, and he's adding to Rain Industries and all of these other companies in his portfolio. Oh, and one thing that isn't showing up on ticker or Micron that Pabrai revealed in a recent talk on the Everything Money channel is that he invested in Prosus. Now, we all know, if you follow Mohnish Pabrai at all, that he's loving Tencent. And so the Prosus position isn't showing up on any of these services, probably because he bought it on the Amsterdam exchange and his position is very small. Maybe it'll appear on ticker at some point, but that's probably a significant portion. I would imagine he made a full 10% bet. Now that's pure speculation, but the way that he talks about his transition to wonderful businesses, I would find it hard to believe that he would allocate anything less than a full position to that. So Seritage, still something that I would expect to see remain in his portfolio for the next 10 years. This is not something that is just an overnight success type of situation. This is more of a 7-foot hurdle that Buffett talks about, not a 1-foot hurdle. Pabrai doesn't only have to invest in wonderful companies. He has a toolbox of different tools for different situations. Seritage came when it was extremely cheap at about $6 per share during the coronavirus pandemic in March of 2020. And while it is actually reaching those prices again, he took some off of the table to fund other investments, which is perfectly okay. And then one thing you might be seeing missing from this is his position in Alibaba, which he completely sold out of. And that is likely due to his new position in Prosus, aka Tencent. I'm not sure what his thoughts are on holding two companies that are basically major players in the China tech scene, in Alibaba and Tencent. Pabrai is one of the investors, along with Guy Spear and Rob Vinall that I mentioned earlier, that have invested in Prosus to get access to this Tencent investment. So some investors are okay with holding both Alibaba and Tencent, that being Guy Spear and Rob Vinall both have both positions. But Mohnish Pabrai is more of a heavy bet. I'm going to go all in on the better opportunity type guy. And because he spotted Tencent and had the opportunity to take some tax loss harvesting with Alibaba, moved it all over to Prosus, which he believes is the better long-term bet. I will say that one thing that's making me a little bit uncomfortable with Pabrai right now is that he's making a lot of portfolio changes. And for somebody who really espouses the idea of holding positions for the long term, he is seemingly still in, let's just give him the benefit of the doubt that he's still in a transition of wanting the majority of his portfolio to be in these long-term vehicles like Tencent. I mean, even Micron and Seritage do not count as companies that he probably wants to hold forever. All right, so that is that. I hope you enjoyed the coverage of 4 of my favorite super investors to follow. I would say that my key takeaways from the review of these portfolios is that WIX has shot up once again to the top of my watch list. It's a good sized company. The price has come down extremely since the last time I was looking at it, at about $170 per share. Thankful that I didn't make any investing decision then. If you like this video, you may enjoy this video over here. Thank you so much for watching this all the way to the end. I really appreciate your time. Please like this video and subscribe for more, and I will see you in the next one.